Hello, 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 and welcome back to the podcast. Thank you very much for being here. All right. Today we are going to talk about self-insuring because I had a client ask about self-insuring for crop insurance. Now, I don't think I've ever talked about this because there's really not a lot to say, but I'm going to bundle it just with self-insuring in general. Okay. So if you have, Nelson talks about self-insuring in his book that if we have liability insurance, we need to have liability insurance on our vehicles, but comp and collision, we should self-insure. And so some people think like, oh, well, I'm just going to self-insure right away. And that is as awesome as that might sound with the price of vehicles today, with the price of homes, with the price of replacing anything, we have to look at, are we ready to do that instantly with enough cash value in the policy? And are you a person that has sort of a black cloud around you? Are you the kind of person that is constantly, it's like there is constantly an issue. And thank goodness I had insurance for that. And I don't know, I don't know that I 100% agree with Nelson on this one. This might be one of those things where I go, oh, we got to look at it a little bit differently. So let's talk about just a vehicle, for example. Everybody right now is talking about how ridiculous their homeowners insurance is, how ridiculous their auto insurance is. I am seeing it across the country. It is a thing. It is not just Florida. It is not just certain states where there's hurricanes and there's worse weather. It is across the country as a whole. And I have a couple of clients that are property and casualty agents, which means those people are doing home and auto. Well, I talked to one of them and he was telling me how much more a claim is. And so this particular company, which I'm not going to name names of, but y'all know who it is. Anywho, this particular company, their claims went up by almost triple in a 1 year's time. And so when we are paying an insurance company, they're not just sitting there getting rich. That is such an annoying concept to me that, oh, you think that your company, you're paying all these insurance premiums and the insurance company is getting rich. I mean, maybe if it's a really shitty company, but all in all, that's not what's happening. So we want them to pay the claim, right? If you have an accident, we want them to pay the claim. But think about it in today's world. We have more accidents because people are texting and driving. That's just a common occurrence on a daily basis anymore. So we have people texting and driving. And now, if I am in an accident, guess what? My bumper has sensors. My windshield has sensors. If I crack a windshield, it's not $100 windshield anymore. I used to sell property and casualty insurance way back when. And a windshield was like $100. There weren't any sensors in it. Now there's windshield wiper sensors and you can't even replace a windshield wiper for a little or nothing, right? Your bumpers have sensors. Your mirrors have sensors. Everything is more expensive to replace because it has more electronics in it, but it also costs more due to the COVID. And so now it's just astronomical prices. So of course, insurance companies are going to charge you more so that they can build up that pool of money again and they can pay those claims. So you have a choice to not pay the premium and not have your claim paid, or you self-insure. And that's fantastic. But if I look at self-insuring, I'm like, geez, if it's going to cost me $80,000 to $100,000 to replace a vehicle today, I better have enough cash value that I better have an excess of 80 grand, right? If my vehicle is going to be 80,000 to replace, I better have an excess of $80,000. And then I have a loan on the policy. So it might take me 5 to 6 years to get that paid back. Well, what happens if we have another claim in the process? Maybe we're not going to total a vehicle, but maybe we're going to have another claim that's $5,000 or $10,000. In Nelson's book, he said, he basically was referring to how many times do you ever collect on your insurance? Well, all right, if you don't live on a farm, you live in town, you may not collect on insurance a lot. You have a garage, you can put your vehicle in, you don't have to worry about hail damage. But if I'm driving country roads, I'm probably going to have a cracked windshield. I'm probably going to have a deer that I hit, or a cow, or a dog, or something crazy. We hardly ever had claims until we moved out of town. And now we have two vehicles with cracked windshields because I'm not replacing them because they're going to just get cracked again, right? We can still see through it. So I'm not replacing them. We've hit a dog. There's horses on the road all the time, or there's cows out. And so, or there's a deer, like you got to watch for deer. I don't know how many of those guys we've avoided. And so the risk of having a claim is a little bit higher. Would I personally self-insure? Not a chance. Nope. I am going to pay for comp and collision because chances are, if I don't hit a deer, some doorknob driving and texting is going to hit me. Okay. I am defensive driving all the time. Don't even get me started on texting and driving. If you guys are texting and driving, just stop. You're going to kill somebody because of a text message. Really? And here's another thing that drives me crazy is how many people are going to hit you because everything in these vehicles are electronic. And for me, just to change a radio station now, I have to like go into 2 or 3 different screens. New vehicles drive me, their control panels are almost worse than texting and driving. So there's that too. Anyway, if we're going to self-insure for vehicles, that's kind of my rationale behind it. If it was a vehicle that we were talking about 20 years ago, that's a bit of a different story. Would I self-insure that vehicle? Absolutely. Would I self-insure a vehicle that doesn't have all the electronics and is older and not worth a whole lot of money? Yep, absolutely. I would self-insure those all the time if I'm at the point where I can replace it. But if I have a newer vehicle, I'm not going to probably self-insure that vehicle because I can use that $80,000 of cash value to go buy something that creates more cash value. It seems like the premium to me that I'm going to pay for insurance is not as astronomical as the price of the new vehicle. Now let's talk about crop insurance because I have had a lot of people ask this. I've actually created spreadsheets and done a lot of research on crop insurance to try to figure out how whole life insurance can work with crop insurance. And I've yet to figure it out because I don't know everything. For those of you that think I do, I don't know everything. And for those of you that think that I think I know everything, that is the next podcast. Anyway, if we have crop insurance, if we're going to self-insure, and in my head, we're self-insuring because crop insurance is so expensive and we have a lot of acreage. So if we're going to do that, the way I have it figured, we almost need to create like an LLC. And that LLC would own multiple policies on multiple people across multiple states of multiple ages. Okay? So we have to have old people that are going to die soon. And then we have to have young people so that when the old people pass, we have those discounted dollars coming back into the LLC so we can really build cash value. Now, even if we do that, the numbers are very, very hard because of the fact that we don't know where the catastrophic event is going to happen. Look at what is happening right now in Iowa, South Dakota, the tornadoes that have come through Texas, the stuff that's hit Florida. Like it's the fact that North Dakota has had some rain and planting was late. What happens if we have preventive plant? All of those things are going to come into factor. And even if it's across the country, that might mitigate because we might have somebody that doesn't have bad weather and we might have somebody that does. But What happens when we have enough to pay a claim 1 year, but we're not collecting enough premium and payback because we have to pay the loan back in order for the catastrophic event next year? Again, it seems like recently, and maybe because I'm getting old and paying attention to weather, but it seems like recently we have had such a shift in weather that even your home and auto companies are saying, hey, we need to raise the price of your home insurance because there is such crazy weather between hurricanes and tornadoes and hail that we are paying more claims on homeowners insurance than we've ever paid before. So if we're looking at crop insurance, we're going to have to still pay not what we're paying now, but what the government subsidizes as well. So if we're going to self-insure, we're basically going to need to take the same premium, but double what we're paying because the government subsidizes about 50% from my research. And the government subsidizes it because even the insurance companies have not quite figured out how they can mitigate that risk without a subsidy. I'm not a lover of government subsidized crop insurance. But when I did the research, it changed my mind a little in the aspect of, holy crap, this stuff is so expensive. And when you really start to look at the actuarial side of that and to mitigate it, like insurance companies would, and say, okay, what am I going to have to pay in claims? How soon do I need that replenished to pay the next claim? What's the average number of claims? Once you start to do all the research to figure out how much you need, you know then why the government has to subsidize it. Because it's just weather related. The insurance companies themselves for P&C are trying to mitigate the homeowner's insurance and the auto insurance and the boat insurance and the camper insurance. And they're trying to mitigate all of those, which means they're seeing across the board, holy moly, we are not collecting enough premium. And our pool of money to pay claims is really low. We don't want to not pay a claim. So now we have to collect more premium. That's going to coincide on the crop insurance side as well. And so as much as I think it would be awesome to self-insure, and I could probably sell a boatload of life insurance, I personally am not smart enough to go, okay, we have to do all the research across the country and pick out the places that have no claims compared to the places that have a lot of claims. And then we have to figure out the frequency of how soon and how often those claims are paid and what kind of insurance and what kind of crop are we covering and what's the price of that crop and what's the average yield. And oh my, it's a lot. And so I'm not saying it can't be done. It just might be a full-time job for somebody to do that. And it's going to take years of funding a policy, and it's going to take somebody dying, in the way I look at it, it's going to take somebody dying to leave some discounted dollars to get that thing started. And so how do we know which old person? How do we know when they're going to die? Maybe it's a young person that dies early and we have the money going in to create that system, even if it's our family operation. We're looking at decades, in my opinion. So as much as I think it would be awesome to do that, maybe for a small operation, it wouldn't be quite that difficult. But for a bigger operation, you may as well just go buy crop insurance because it's one big pool and you're putting a lot less money into it with the government subsidizing it, us subsidizing it. You're subsidizing your own insurance. I mean, the government doesn't make money, right? So anything you get back from them is stuff you put in there. Not all of it, obviously, but some of it is still you. So it doesn't seem as easy as what Nelson makes it sound to be in the book. And I could be missing something there, but I just look at the cost of what it is to replace those things. And do I want to do that, or do I want to have a cash flowing asset? That really comes down to where your thought process is, where you are in life, how you want that to be. Nelson it's not that he didn't like cash flowing assets, it's just that was not his priority. So he self-insured instead of giving that money to companies. Again, though, we were doing that in a time where we don't have probably the accident count we have today due to just technology that's not in the vehicle. There weren't cell phones in the vehicle. There weren't these big, huge darn screens in the vehicle. I mean, just for us in my husband's vehicle, just for us to change temperature or to put our heated seats on or our heated steering wheel on, we have to go into some stupid screen and push like 3 or 4 buttons. And I'm like, this is not safe. This is not safe. Ideally, yes, you should do that before you take off. However, what if I've already took off and I'm like, oh, I'm just a little bit chilly. I want to put my heated seats on. In my vehicle, it's just a button. In his vehicle, it's a screen. And so I had that in my old vehicle too. It was a Jeep. And I had to go into the screen and touch a bunch of stuff in order just to put a seat on. It wasn't just a button on the dash. So it's just not as safe. People just don't have their eyes on the road. Vehicles are more expensive. So take that for what you will. That's my 2 cents on it. Let me know if you have comments, questions, concerns. You know where I'm at. Otherwise, I look forward to talking to you. Once you've read the book, give me a call. Happy to look at what it's going to do for your operation, and we can go from there. Have a good one.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.